while you were pouring coffee on a quiet Monday morning, a $87 billion trade wall quietly collapsed, no sirens, no headlines screaming, just a handshake in Beijing. Mark Carney, Xi Jinping, one table, one pen, and suddenly 34% tariffs on Chinese electric vehicles began to vanish. At the same time, Canadian canola, wheat, and pork found a fast lane back into a 4 billion person market. Here's the contrast they don't want you to focus on. You were told supply chains were too fragile. You were told China was too dangerous. You were told decoupling was inevitable. Yet in less than 72 hours, Canada rewired its economic future behind closed doors. Not in Ottawa, not in Washington, but 3,200 miles away under red banners and security cameras. And here's the part that should make you uncomfortable. This didn't happen because of trade. It happened because Donald Trump turned unpredictability into policy, because 77% of Canada's exports still flow south, because when the US sneezes, Canada bleeds cash. So Carney didn't diversify, he defected. While you were watching EV commercials and culture wars, a new owner stepped closer to your food supply, your energy future, your job security. This wasn't diplomacy. It was a quiet transfer of leverage, and nobody is talking about what it actually means. This is the mistake everyone makes. They think this is politics. It's not. Politics is the noise layer. This is the operating system running underneath, and once you see it, you can't unsee it. The system has 4 stages, executed the same way. Every time. Stage 1, isolation. You don't send troops, you cut arteries. Banking access restricted. Tariffs weaponized. Payment rails quietly rerouted. In Canada's case, a reminder that 77-78% of exports still depend on the United States. A reminder delivered by Donald Trump through threats, delays, and deals that expire when his mood changes. Capital hates uncertainty, so it starts looking for exits. Stage 2, demonization. You don't argue policy, you rewrite morality. Unreliable partner, national security risk, threat to values. Notice something? The labels always come before the sanctions. China wasn't framed as a market, it was framed as a danger, until suddenly it wasn't. Stage 3, intervention. Not bombs, leverage, closed-door meetings, back-channel delegations, emergency exemptions. Watch the choreography, public hostility, private negotiations. While cameras point at speeches, the real decisions happen in hotel suites and secured conference rooms. This is where Mark Carney appears, not as a politician, but as a system administrator, rerouting dependencies, reducing single-point failure. Stage 4, extraction. This is the endgame. Trade barriers fall, market access reopens, contracts surface, EV supply chains, agricultural corridors, energy partnerships labeled strategic. Nothing moves until ownership is clarified. And here's the rule. Peace on television means contracts off camera. When you hear predictability, what they mean is control. Canada didn't choose China, it chose survivability. Stage 4 is forming. The paperwork just hasn't leaked yet. Pattern loading, clock ticking. Let's rewind. Not to opinions, to receipts. Case 1, Iraq. In 2000, Saddam Hussein made a move that never shows up in sound bites. He announced Iraq would sell oil under the UN Oil for Food program in euros, not dollars. At the time, Iraq was sitting on 112 billion barrels of proven oil reserves, 4th largest on the planet. That wasn't symbolism, that was a threat to the petrodollar. Because oil isn't just fuel, it's collateral. Every barrel priced in dollars forces global demand for US debt. Break that loop, and you don't just hurt Washington, you destabilize the entire balance sheet. Watch the timeline. 2001, the euro gained strength. 2002, Washington reclassifies Iraq from containment to imminent threat. Weapons of mass destruction, mobile labs, aluminum tubes, none found, none needed. March 2003, invasion begins. Baghdad falls in 21 days. And here's the detail they skip. By June 2003, Iraqi oil sales were switched back to ULRs. No press conference, no debate, just accounting. Then come the contracts. ExxonMobil, Chevron, BP, access to fields like Rumaila, capable of producing over 1.5 million barrels per day. Iraq never regained monetary sovereignty, but global oil pricing regained discipline. Stage 4 complete. Pattern verified. Now case 2, Libya. This one was messier and more dangerous. Muammar Gaddafi didn't want euros. He wanted something worse. Gold. Libya controlled roughly 143 tons of physical gold. Not paper claims. Bars. Vaulted. Gaddafi's plan was the gold dinar, a Pan-African currency backed by gold, oil, gas, minerals, all priced outside the dollar system. If implemented, it would have rerouted trade for over 30 African nations. That's not a rebellion, that's a fork in the global operating system. Watch the playbook activate. Stage 1, isolation. Libya sanctioned, assets frozen, diplomatic channels throttled. Stage 2, demonization, madman, human rights violator, threat to civilians. Notice the speed, years of tolerance, then sudden urgency. Stage 3, intervention, 2011, NATO airstrikes, not an invasion, a no-fly zone. Gaddafi's convoy is hit near Sirte. He's dragged from a drainage pipe, killed on camera. And then something strange happens. The gold disappears. 143 tons gone. No audit, no recovery report, just silence. Libya collapses into factions. Oil production fractures. Foreign operators re-enter under stabilization agreements. French banks, British intermediaries, U.S. energy firms through proxies. The gold dinar never launches. Africa stays dollar dependent. Stage 4 complete. Pattern verified. Here's the uncomfortable link. Iraq challenged currency denomination. Libya challenged monetary architecture. Both were framed as security threats. Both were liberated. Both lost control of their resources. No conspiracy needed, just incentives. When a system is threatened, it doesn't argue, it executes, and it always leaves the same trail. Collapsed sovereignty, repriced assets, new contracts. The past isn't history, it's a user manual. And now, the same operating system is booting up again. Different country, different language, same steps. Now bring it forward to the present tense. Forget the speeches, look at the signals, because the playbook doesn't announce itself. It leaks through paperwork. Start with timing. The Canada-China tariff rollback didn't appear out of nowhere. It followed weeks of unpublicized delegations, trade officials rotating through Beijing and Washington within the same 10-day window. That's not coincidence. That's sequencing. Stage 1 was already in motion. Isolation pressure, not on China, on Canada. The White House didn't impose new tariffs. It didn't have to. It introduced volatility, border uncertainty, EV subsidy reversals, clean energy credits quietly rewritten, capital read the message instantly. Stage 2 softened overnight, demonization dialed down. Notice the language shift. China went from strategic threat to necessary partner. That change didn't come from voters, it came from balance sheets. Stage 3 happened off camera. Closed-door meetings, technical consultations, emergency exemptions framed as temporary. And here's the tell. While public attention stayed on tariffs, EU regulators quietly approved energy-related carve-outs, not announced, not debated, just filed. Watch the names that always reappear: Chevron, Halliburton, logistics subsidiaries you've never heard of. These companies don't chase peace, they chase certainty. And certainty only arrives when stage 4 is imminent. Extraction. Don't look at headlines talking about stability. Look at 99-year land leases, joint venture frameworks, memorandums of understanding stamped, non-binding. That's where ownership changes hands. Canada didn't pivot to China. It followed the escape route the system allows, because when the US becomes unpredictable, the OS reroutes dependencies elsewhere. Here's the forecast. If this pattern holds, the next headlines won't be about diplomacy. They'll be about strategic resource corridors, integrated EV supply chains, agricultural security partnerships. Translation. Assets are being repriced, and the people clapping for peace won't notice until stage 4 is irreversible, because by the time contracts surface, the leverage is already gone. The news didn't explain this. It concealed it. Now zoom in, away from Beijing, away from Ottawa, to you, because every stage of this system has a bill, and it's never sent to the people who signed the deal. Start with energy. If Chinese EVs flood the Canadian market again, prices drop. Fast, great headline. Cheap cars, lower emissions. But here's the trade-off they don't say out loud. Canadian battery startups, crushed. Supply contracts rerouted to KATL and BYD. Domestic subsidies suddenly under review. Your pension fund doesn't hold ideology. It holds exposure. Energy next. If Chinese capital re-enters Canadian clean energy projects, oil demand projections wobble. That sounds abstract. It isn't. If Venezuelan and Middle Eastern oil flows normalize at the same time and Canada loses pricing leverage, energy equities reprice downward. Your safe dividend stock down 12-18% in a single quarter. No warning, just an analyst downgrade buried on page 6. Now food. Canadian canola access to China reopens. Farm revenues spike. Short term. But contracts are denominated in long cycle pricing formulas. Locked in. Inflexible. If Beijing tightens terms later, farmers eat the volatility, not Ottawa. And here's the part that hits everyone. Currency pressure. More trade routed outside the U.S. orbit means more hedging, more swaps, more exposure to yuan-linked instruments. You don't need to own foreign currency to be affected. Your mortgage rate already feels it. Your grocery bill confirms it. This is the collateral damage phase. No explosions, no crisis banners, just slow bleed. So here's the only actionable rule that survives every cycle. Don't trust the word peace. Trust where capital is moving. Track resource corridors, energy choke points, agricultural dependencies. Because when stage 4 completes, the upside is privatized. The downside is distributed. And you are always in the distribution pool. Here's the final warning. This system doesn't need your belief. It doesn't care about your politics. It doesn't wait for your consent. It runs silently, continuously. While you argue headlines, it updates ownership tables. While you celebrate peace, it finalizes contracts. While you're told this is cooperation, the leverage has already moved. Different countries, different leaders, same outcome. The names change, the mechanics don't. The pattern doesn't care if you believe in it. It doesn't need your permission. It just unfolds. And if you only notice it after the prices move, after the jobs vanish, after the assets are locked in, you're not a participant. You're collateral. Subscribe if you don't want to become collateral damage in the next stage.